Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, good morning. Good to have you here. As far as individual stocks go, what's on your radar? Two or three names on the back of earnings or, of course, all this tariff-related news flow. Dharmesh.
Yeah, good morning, Prashant. I think domestic centric, focus company should be looked into, and there I think Hero MotoCorp and Bajaj Auto came out with numbers. So we are, bullish on the two-wheeler space. Hero MotoCorp we have discussed earlier, but the numbers to my mind was very good if you compare that to Bajaj Auto. And the reason being, if you look at Hero MotoCorp, there was around 11% decline in the sales volume, the bikes being sold in the Q1. And still they managed to, come out with a higher operating margin and around 2 to 3% kind of a decline in profitability on a pro forma basis. In the July numbers and June numbers of the bike sales were fairly encouraging. Around 21% kind of a sales growth was there. And keeping this in mind, and if you compare this with, say, Bajaj Auto, which came out with decent set of numbers, but the volume growth is missing out there. It's only hardly a 1% kind of a volume growth was there. And July numbers were far dismal, 3.3% kind of a volume growth. Going forward, their con call suggested around 5 to 6% kind of a volume growth. So that is a bit scarier. So I think like by like comparison, Hero MotoCorp looks a good value buy. It's trading at 19 times 1 year forward PE multiple, where Bajaj is at 30 times 1 year forward PE multiple, with ROEs of Hero MotoCorp and Bajaj Auto both at same place, 23 times of PE multiple. So going into the festive season, this time even, Ganesh Chaturthi is being advanced into a month of August. We think that 5 lakh kind of a run rate is very much likely for Hero MotoCorp with export sales. So we are going with a green on Hero MotoCorp for this season. So that is one area which we are finding quite interesting, along with Mahindra and Mahindra.
Okay, Hero MotoCorp and Mahindra, Dharmesh, those are the two stocks that you like from the auto pack. Dharmesh, what do you make of this issue? Did you have a look at it? I was at the conference and Pa Jindal very candidly said at one point of time they were thinking of selling it. Then he came in there, he turned it around, and today it's a 20 million ton plant. What's your view on this issue and what do you like from cement?
Yeah, good morning, Nigel. I mean, the issue is fairly priced. It's not very attractively priced, if I may say so. And the horizons are good. I mean, they are talking about doubling of capacity and all, but the concern remains of the geographies in which JSW Cement would be operating. So primarily into South India, which is already supplied with over capacity, and then the East India, where the competition is fairly high. And their UltraTech has been, fairly robust in gaining the market share. So it has to be seen how, effectively they are able to gain market share in the East India geography. At the same time, the gap between the clinker and grinding capacity is way too high than the industry standards. So around, clinker capacity is 40% of the grinding capacity. Usually it is at 60% or so. So that means they will be buying clinker from the market. So these are our 2-3 concern areas for JSW Cement. So we are giving it a pass as far as, IPO is concerned. We'll see how the performance happens, and then maybe we can have a coverage on this. As of now, it's more of a neutral to a slightly negative bias on this IPO.